Hey everybody, it's Jack and welcome back. Today is yet again another dividend portfolio building video. If you're new to the channel, this is my third one. Over the past few weeks, I've been building separate dividend portfolios focused on different styles of dividend stocks and different styles of general investing. So in today's video, I will be building my third diverse dividend portfolio of some of the best Canadian dividend stocks out there. The first portfolio I built was a diverse dividend portfolio that focused on income generation. So it contained 5 stocks that all have high dividend yields in that 6 to 7% range, but don't see a lot of growth over the years, and their share price is pretty stable. In my second dividend portfolio, I focused on the exact opposite of income generation, and we looked at growth. So we had 5 stocks that all offer around 3% or under in dividend yield, but have high room for growth over the coming years. And in today's video, I'm going to be doing a portfolio that fits right in the middle of the two. This is going to be an overall well-rounded portfolio that has dividend stocks that offer a 4 to 5% dividend yield, but also have room for incremental growth over the next few years. I really think this is probably my favorite of the dividend portfolios because I think that these stocks and this portfolio really work for any investor out there. These are stocks that are going to give you a nice solid income off of your dividends, but also see that account grow over time as your shares appreciate over the years. So these are really stable, safe stocks that will continue to outperform and see great gains over the coming years. So I really think that this portfolio works well for any investor of any age or any experience. These are great Canadian stocks that I own in my portfolio for the majority of them, and I really think that they can backbone any Canadian portfolio. So I hope you guys enjoy this video, and let's start building a well-balanced portfolio of dividend stocks. So the first dividend stock that goes into the balanced portfolio is one of my all-time favorite Canadian stocks. It's one that I've held in my TFSA over the past few years and has been one of my top performers. Anyone who owns this stock is definitely happy with it over the years. It's also one that has done extremely well over the past few months. It's one of the Canadian banks, so this is in the financial sector. It's my favorite of the Canadian banks, but again, they are all good options. It's TD Bank, ticker symbol TD. I will give a considerable mention to the Bank of Nova Scotia, ticker symbol BNS, because that is my second favorite Canadian bank, and I think it is also a great option for this type of portfolio. So TD Bank trades under the ticker symbol TD on both the Canadian and US stock market, and it currently trades at a price of $82.14 per share. It currently has a dividend of 3.83%, and what I like most about this dividend is the consistency at which TD has increased the dividend year after year. Over the past while, TD has increased its dividend at an annual rate of 11%. TD's dividend has also been growing year after year more than any of the other Canadian banks. If you look at this chart, you can see that TD's dividend over the past few years has grown 10% more than the other banks. So this is a great track record of dividend growth that you get with TD. And if we look at the actual growth in the stock, we can see that over the past 6 months, TD has been recovered nicely from the pandemic and is actually trading at all-time highs. But if we look at its max chart, you can see the growth that TD has had over the years. It is very consistent year after year. I think this growth is only going to continue as TD has really branched into the United States and made a name for itself with its bank and its online trading platform, TD Ameritrade. TD is seeing some great growth in the US and is capitalizing on its market share there and continuing to grow it year after year. I think this will push TD's share price higher and higher over the next few years, mixed with the fact that it has a great dividend and dividend growth history makes TD a no-brainer. So TD was the first stock into our balanced portfolio. The second dividend stock that I'll be adding to this portfolio that offers a solid dividend and has room for growth over the coming years is also in the financial sector, but diversifying a little bit, where this is an insurance company. This is one that has been growing its footprint in the global markets. It's really been expanding into Asia, which is why I think this one has room for growth over the coming years, as it's really starting to get a grasp in the Asian markets. This is MANULIFE Financial, ticker symbol MFC. MANULIFE currently trades at $26.95 per share and has a dividend yield of 4.13%, which is really nice. If we look at its chart over the past 6 months, we can see that just like TD, it has seen some really solid recovery from the pandemic and has been increasing really steadily. If we go to its max chart, we can see that MANULIFE in 2008, when the housing market collapsed, because it's an insurance company, got hit extremely hard and has still been recovering since then. It's seen some solid growth over the past few years and was hit hard again by the pandemic and has recovered to the pre-pandemic levels. The real driving factor for me in Manulife Financial's growth in the coming years is, like I said, it's diversifying globally and really starting to make a footprint in the Asian markets where it's seeing some solid growth year over year, which is really exciting and I think will continue to push its share price up as you collect that over 4% dividend. So we now have TD and Manulife in our dividend stock portfolio currently. It's time to now add a third dividend stock to our balanced portfolio. This is a stock that if you've watched any of my previous videos and you've seen it, it's in my personal portfolio, and I absolutely love this stock as a core holding for anybody looking for a great dividend stock that offers a nice dividend and has room for growth year over year in the coming years. This one is in the utilities sector, but what I like about this stock is that 66% of the business is in its core utilities and locked up in long-term contracts with an average lifespan of around 13 years. So they have long-term cash flow locked up and recurring revenues, but they also have 33% of their business into renewable energy. And I really think this is the future long-term. So I like that they have this nice balance of 66% in their core utilities and long-term contracts, while they also have 33% into the renewable space that will help give it that growth. This is Algonquin Power and Utilities, ticker symbol AQN. Algonquin Power and Utilities, AQN, currently trades at $19.77 per share, while offering a 4.02% dividend, which is a really decent dividend. And if we look at its share price, we can see that over the past 6 months, it's actually down quite a bit from where it was just over a month ago. It was trading at over $22 and it's currently under $20. I think getting AQN under $20 is a great deal. It dropped over the past month and a half because of the news that one of its wind farms down in Texas took some damage due to the severe storms that they faced this winter. In the short term, yes, this takes a hit to their cash as they have to repair their farm, and it was millions of dollars. But in the long term, I don't see this affecting Algonquin Power as a business. So this reduction in share price, for me personally, I think is a great time to buy. Because if we look at the 5-year chart, you can see how reliable Algonquin Power is and its increase year over year. Its share price increases over 10% per year for the past 5 years, while you're getting that over 4% dividend. This makes Algonquin Power a great play, while 33% of its business is in the renewable energy space, which I think will propel its growth and continue it for years to come. So we have 3 great dividend stocks in our portfolio currently, and now let's add a 4th stock and diversify our portfolio a little bit more. This next stock is in the telecommunications industry. It's one of Canada's big 3 telecom companies. This is one you've seen on the channel already if you've been following. This is TELUS, ticker symbol T. And what I like about TELUS is that they are really growing their operations and have different diverse streams of revenue in their overall business model. They are targeting some really cool things with telemedicine. They have a telehealth vertical of their business, and they have also been doing over the past few years some great things by putting in place the infrastructure in order to capitalize on the 5G mobile market. So I think they're really poised and in a good position to grow over the next few years consistently, while they also offer an above 4% dividend, which is great. TELUS trades under the ticker symbol T in Canada, and if you're in the US, it trades under the ticker symbol TU. It currently trades at $26.35 per share, while offering a 4.78% dividend, so a really nice dividend. And what I like about TELUS is it's been increasing its dividend at a rate of 9% annually over the past decade, so nice dividend growth while offering almost 5% dividend gain today. And looking at TELUS's share price, we can see that over the past 6 months, it's been seeing some really nice increases. And over the past 5 years, it's been super steady and it's starting to increase more and more. I think this next few years will be really great for TELUS with its infrastructure for 5G as well as its telehealth app. So that was TELUS, and we now have 4 diverse dividend stocks within our portfolio currently. We have 2 within the financial sector, one as a Canadian bank in TD, and the other is an insurance company, MANULIFE Financial. We then also covered a utilities company that has ties to the renewable space in Algonquin Power and Utilities. And then our 4th stock that we just featured, like I said, was TELUS in the telecommunications industry. So to diversify ourselves even a little bit further, we're going to add a real estate investment trust to the portfolio. And this stock is also sort of a recovery play, as it's still below its pre-pandemic levels and has been seeing some pretty solid growth over the past 6 months. And I think it will continue and be able to increase its share price pretty well over the next year to 2 years. Not only that, but it also pays a monthly dividend. So you're going to be able to be getting a monthly cash flow from this investment. The stock or real estate investment trust in question is RIOCAN, ticker symbol REI-UN. RIOCAN currently trades at $19.50, while it offers a 4.92% dividend. And like I said, it pays a monthly dividend, so a constant cash flow coming into your account by investing in RIOCAN. Its dividend was higher a few months ago, but they actually slashed the dividend. It was over 7%, but it's now around 5%. They did this in order to save money that they were paying out in dividends and repurpose it towards building and developing their real estate portfolio further. So I think in the long run, this cut will actually help the business grow in the long term. So I think it was a good move overall. Looking at the share price, we can see that over the past 6 months, RIOCAN has been absolutely killing it, going from $14 all the way to where it's currently at $19.50. So it's already seen some pretty good increase over the past 6 months. But if we actually look at the 5-year chart, you can see how RIOCAN was pretty steady in a $27 range to around $24 range and stayed in this range for a few years before the pandemic struck and real estate investment trusts in general got hit really hard. And they took a while to recover. They didn't see recovery until around a few months ago, and they've been doing extremely well since. RIOCAN is actually still quite below its pre-pandemic levels. It still has 50% room to gain in order to be back at those pre-pandemic levels. So quite a lot of room for RIOCAN to continue to run over the next few years. This is why RIOCAN fits perfectly into the balanced portfolio. It is a great dividend stock while also having some great room for growth over the coming years. So there you have it. That is my balanced dividend portfolio. 5 diverse stocks in different industries that offer not only a great dividend yield, but also room for growth over the coming years. These are truly stocks that I think are among the top Canadian dividend stocks, and I think they can be a core holding in any portfolio. And again, I'm not saying to go out and make an exact portfolio with these 5 stocks. For the average investor, these are great stock picks for your portfolio to give you a nice income off of the dividends and as well have that room for growth. For argument's sake, if you were to create a portfolio with these 5 stocks and only these 5 stocks and were to invest equally among the 5, that would offer you an overall dividend yield of 4.34%. So that's pretty great. With the room for growth on top of that, you're looking at a great annual return with these stocks in your portfolio. And again, I own a lot of these already within my Wealthsimple challenge. So this was my balanced dividend portfolio. And remember, I did have previous videos where I went over a portfolio for income generation and one for growth. I recommend picking and choosing stocks from within these 3 portfolios that I've built over the past few weeks that really cater to your investment needs as an investor. Remember, we are all on different journeys and in different stages of our investment journey as investors. So it differs from person to person. I personally like to root my account in these balanced dividend stocks and add a few income generation ones and a few growth to my portfolio for a well-diversified and well-rounded portfolio. But if you're somebody who's near retirement, you might want to focus more on income generation. If you're somebody who likes to be a little bit more growth oriented, you might focus more on the growth stocks. So again, it truly differs from person to person. Let me know if you guys have any creative ideas for a series of videos that you would like to see on the channel. I'm definitely planning one where I go over different techniques and tips and tricks, where it either be stock chart analysis, how do you analyze a stock chart, support resistance, how to time your entry into a new stock, as well as how to analyze a stock, look at its fundamentals, look at the balance sheet and income statement, things like that, in a wide range of topics for tips and tricks. So that's definitely coming in the pipeline. But let me know other ideas you guys have for videos or a series that you would like to see. It's all up to you guys. So without further ado, I hope you enjoyed. Smash that like button and subscribe to the channel. Lots more content coming your way, and I'll see you in the next one.